ICT Silver Bullet is probably one of the simplest concepts in trading. When you look at analyses or conduct backtesting, everything seems obvious. The time, FVG, entry, exit, what could go wrong? But then you open the terminal, the right time comes, and everything falls apart. Either there is no entry, or the entry is too early, or the price goes away without you. The problem is not in the strategy, the problem is in the details. That's why I decided to make this video, to analyze Silver Bullet not superficially, but with the nuances that really affect the result. I'll show you the mechanics, give examples, and explain how not to miss that bullet when it appears. So, for those who are hearing about this strategy for the first time, ICT Silver Bullet is an entry model that appears at a strictly defined time. It is during this time window that we trade. There are 3 such windows in total, all in Eastern Standard Time: 3 o'clock, 4 o'clock, 10 o'clock, 11 o'clock, and 14:15 o'clock. I recommend focusing on one window from 10 o'clock to 11 o'clock, rather than spreading yourself across all 3. This is the active phase of the New York session, and in my experience, it is during this time that the cleanest, strongest, and most frequent movements are formed. But the most important thing starts even before this hour. From 9 o'clock to 10 o'clock, we note where the liquidity of sellers and buyers remains. In other words, where the stops have accumulated. And after 10 o'clock, the market most often withdraws this liquidity, leaves behind inefficiency, fair value gap, and returns back. If you are able to accurately interpret this moment, you will not only have an entry point, but also a structural pullback with clear risk and quick execution. Everything happens within 1 hour. This is the Silver Bullet. Simple in form, but it only works when you understand where the market is heading. I recommend trading this strategy on indices such as NASDAQ or US30. On currency pairs, especially EUR/USD, Silver Bullet gives less stable results. The best setups are on indices, where there are high volumes and a clear reaction to liquidity. Now let's look at the algorithm of how I use this model in trading. The first thing I do is check the economic calendar. If important news, NFP, CPI, FOMC, etc., is scheduled for 10 a.m. New York time, I skip the day. This is critical. When the bullet candle coincides with a news release, the structure breaks down, and it is no longer Silver Bullet. They must be outside this model. I start trading first thing in the morning. I open the chart at 9:50 a.m. New York time and immediately look to see where liquidity has accumulated over the last hour. It is important to understand that it is between 9 and 10 a.m. that the extremes are formed, which are most often followed by movement. These can be highs, lows, sharp reversals, any obvious places where people place their stops. This is where the market will be targeting in the next hour. Then comes the main window, from 10 to 11 EST. Here I'm waiting for the price to sharply withdraw liquidity, taking out those who entered in one direction and leaving behind an empty space, the fair value gap. If this gap appears in the first 5 minutes, I start to watch closely. This is the best case scenario. Next comes the most interesting part. I wait for a pullback to the middle of this FVG. To accurately determine the entry point, you can draw a Fibonacci retracement and mark the 0.5 zone. Most often, the price returns there to pick up the remaining liquidity. When the pullback occurs, I enter on the opposite side of the liquidity withdrawal. For example, if the market first withdrew highs, I look for a short. If it withdrew lows, I look for a long. It's simple. As for the target, I don't make it up. I set the risk beyond the edge of the FVG and take profit at the first clear liquidity zone along the way. My statistics show that 1, 2, or 1, 3 is the optimum. There is no point in dragging it out any longer. Silver Bullet is not for protracted trades. It is an hourly entry and exit. There is one more thing that almost no one takes into account, and it is precisely because of this that Silver Bullet simply stops working for many people. You've noted everything correctly: liquidity, entry, FVG. But on some days, the model doesn't work at all. The price behaves strangely, there is no entry or you enter, and the market seems to be lagging. In fact, you simply entered at the wrong time. In spring and fall, when the transition to daylight saving time or standard time occurs, terminals and TradingView are often not synchronized with real EST. The 10 o'clock, 11 o'clock window on your chart may actually be 11 o'clock, 12 o'clock, and you don't even notice it. That's why you should always check the exact time via time.is/EST, and it's better to set an alert for UTC right away. Make one mistake and the market will let you know how important every minute is. Before applying Silver Bullet to a real account, I recommend conducting a backtest to see how the strategy works on historical data, where FVG most often appear, which impulses are stronger, and how the price behaves on specific days. This is not just theory. It is a way to learn to see the market in advance. and understand where your entry point is truly logical. And if you want to start earning now, even while you are learning, you can use MiloBot PRO. It is a fully automatic advisor based on its own system without your participation and does not use ICT strategies, so it does not interfere with the development of your system. It works stably, showing growth from $34,000 to $272,000 over 4 years in history. All trades can be verified through my effects book. No magic, just real statistics. If you want to see how it works, download the demo version and run it in the tester. The link is in the description. While you are training yourself, let MiloBot do its job. So, ICT Silver Bullet is not magic and not a guaranteed enter button. It is an hour of concentration, accurate analysis, and understanding of what the market is doing. If you learn to read liquidity, notice deviations, and use filters, you will see how this simple model starts working in your favor. But this is only one of the setups. In the next video, we'll take a look at ICT Power of 3, a model in which the market literally draws the entire plan for you: accumulation, manipulation, and distribution. It is often underestimated, but it is one of the most powerful ways to understand the structure of the day before it ends. Subscribe so you don't miss it, and see you in the next video.